आदित्य सर शुरू करें? अक्षय all set?
Yes sir.
Okay. शुरू करते हैं. Good evening members. This is CA Piyush Chandak, login from Nashik, currently a treasurer of WIRC. I welcome all of you to this part 2 of the GST sectoral series. In part 1, we witnessed a great success, and in part 2 also, this is the third lecture of this series, in which first lecture was of banking, NBFC and stockbroking GST on that. Next was for infra and works contract. This one today is being taken by CA Aditya Surte from Mumbai, one of my good friend and a good orator and speaker as well. It is about NGOs, trust and cooperative society. Next one is for IT and software industry, and the last one is for media and entertainment. My dear friends, WIRC is trying we are trying our best to take best of the seminars and best of the speakers for our benefit. Even we are going to launch a refresher course on concurrent audit soon, which has not happened in WIRC till now. So that will be a 4 days series wherein a complete refresher course will be taken for concurrent audit for the people who have done course on concurrent audit, might be 10 years back, might be 5 years back, and they are doing concurrent audit on practical basis. So we will be having current insight and current knowledge on that. So we are trying our best, my dear friends, and you are requested to take maximum benefit. And I think without taking much time, I will hand over to Akshay to introduce our speaker. Over to you, Akshay.
Yes sir. Thank you Piyush sir. It's indeed an honor to introduce a very good friend Aditya on this platform. He's a BCom FCA LLB General. He's a practicing chartered accountant focusing on indirect taxation and specializing in GST. He's a consultant to various corporates and business entities on matters relating to GST. He's passionate about disseminating knowledge and regularly delivers lectures on GST at seminars organized by various professional and trade organizations, and conducts training for CA firms and corporate houses. He is a visiting faculty at the Management Development Program of the Wellinkar Institute of Management Research and Development, Matunga. He was awarded as the Best Upcoming Speaker 2016 by the All India Federation of Tax Practitioners in December 2016. He was also awarded the Best Paper Writer for presenting technical paper on case studies in composite and mixed supply at the 42nd RRC of the GST PM held at Bangalore in February 2018. He is a regular contributor to the articles in GST Review published by the GST PM and the Chamber's Journal published by the Chamber of Tax Consultants. He has authored the Applicability and Impact of GST on Charitable and Religious Trusts published by the WIRC of ICI. He has authored the short publication on transitional provisions in GST published by the GST PAM. He is also an author to the key rulings under the indirect tax laws, a GST perspective, published by the Chamber of Tax Consultants in association with Wolters Kluwer. He is selected as a training faculty by the ICAI for training on GST. He is also a special invitee member of the West Zone of AIFTP. He was also the convener of the Law and Representation Committee of the GST PM for 3 consecutive years from 1819 to 2021. So here we present to you CA Aditya Surte, the speaker for the day. Over to you, Aditya.
Thank you very much, Akshay, for the very kind and nice introduction. Thank you, Piyush ji, for welcoming all of us. Before I begin, I want to heartily thank WIRC for inviting me here to share my thoughts on this subject in this very successful GST sectoral series. So I'll just share my screen before I proceed. Visible to everyone? Okay, so I will continue. If at all, this being a digital platform, any problem from my end, from my connectivity, if there is any issue, I'm not able to understand, do interrupt me and let me know that there is an issue. All right. Okay.
Okay. Yes.
Yeah. Good evening, everybody. Good evening, everyone. Today, the subject is GST on NGO Trust Cooperative Society. Now, as we can all see, there are multiple entities that can be covered when we talk about NGO or a trust or cooperative society. The common thread I see that on this in the subject that has been given to me is that all these are uh, majorly conducting activities that are philanthropic or charitable activities. So we can all quickly summarize as to what we are going to talk about today is the impact on GST on of GST on institutions or organizations that are conducting charitable activities or that are primarily not-for-profit entities. Agenda for the day. I have split this presentation or this talk in two sections. I will first be covering charitable institutions, and thereafter, since the topic that was given to me was NGO trust and cooperative societies, I will also be dealing with cooperative societies, primarily with cooperative housing societies. However, it is my firm belief that uh, the subject of cooperative housing societies deserves a 2-hour lecture separately, but we will try to touch upon the subject, cover as much as possible in the given time frame. In charitable institutions, we will cover the introduction, the scope of GST with regard to charitable institutions, exemption to charitable activities. I am also covering certain activities which are majoritarily undertaken or also undertaken by charitable institutions, healthcare services, educational institutions, certain other notable exemptions with regard to charitable activities. Then we will also talk about taxability of supplies made free of cost by such charitable institutions, impact on ITC of charitable institutions, and then registration requirements. In all places, wherever it is required, I will cover the relevant cases or advance rulings that have happened in the GST era. Next, in cooperative societies, we'll cover the introduction. We'll touch upon the principle of mutuality in the context of GST, relevant exemption entry with regard to cooperative housing societies, registration requirements, the controversy that has happened over the interpretation of exemption entry and certain valuation issues. Thereafter, at the end, we'll keep some time to take up some questions. I'll see how many questions I can answer in the given time frame. Let us go ahead. First, let's cover charitable institutions. Again, charitable institutions can be, we are talking about NGOs. NGOs can be formed as trusts, can be formed as societies under the Societies Registration Act 1860, as Section 8 companies. So any form of charitable institutions, we are covering the GST impact on those. Just an introduction to what we are intending to mean by an NGO. So NGO is a group that functions independently of any government, formed to serve a social or political goal, majorly humanitarian causes or protection of environment. They are often non-profit. They rely on variety of funding sources, from private donations and membership dues to government grants also. Although NGOs are free from government control, they heavily rely on government grants. So this typology that I have given gives the different types of NGOs that are functioning. There are self-service NGOs, there are NGOs that are serving a specific category of persons. There are NGOs that are for the general public. So Salvation Army, Alcoholics Anonymous, these are different kinds of NGOs. Labor unions are also NGOs, trade associations are NGOs. So these are all non-government organizations. They can take up any form. So they can be registered as a trust, a society, or a Section 8 company, or any other kind of social service organization. Now, when we talk of a trust we understand broadly in two categories. There's a public trust and a private trust, majorly depending on who the beneficiaries are. If the beneficiaries are certain specific individual or individuals, then it's a private trust. If the beneficiaries are public at large, then it's a public trust. It can be a charitable trust or it can be a religious trust. Under the income tax law, although I am no expert in income tax, my understanding is that the charitable as well as religious trusts are treated at par. They are for the purposes of charitable purposes and the exemptions. Similar is the case with GST. Even under GST, a religious trust and a charitable trust, we can use the term interchangeably. There are specific exemptions that are given. The primary difference between income tax and GST, if you ask me, I would say that under the income tax law or the income tax act, it is the income of the particular trust that is the matter in question. So what is the tax that is to be levied on the income of that trust, and exemptions to that particular income depending on satisfying certain conditions. GST, on the other hand, is a tax on transaction. So irrespective of what is the entity, the exemption that is given, that is qua certain activities of that particular organization. There may be certain cases which we will see where the entire form or entire all the institutions which are doing charitable activities, which are registered under the Income Tax Act, are covered. So all the activities, but over there as well, you will see that they have specifically defined that these are the activities which we are considering as charitable activities and for which we are giving exemption. The point of distinction that I'm trying to make at the beginning is that GST, being a transaction-based tax, the exemptions are going to be qua particular transactions, and there is no blanket exemption on any particular institution or an organization. Now, when we talk about the word charity, you see the dictionary meaning, you will see words such as generosity, relief of the poor, helpfulness, or a gift or benevolent act, or public purpose. This is the general meaning of charity that we all of us understand, or the dictionary meaning. However, for the purposes of taxation, the charitable activities, or for the purposes of income tax charitable purpose, is specifically defined in each statute for the purposes of especially granting exemptions. So under the Income Tax Act, charitable purpose has been defined to include relief of the poor, education, yoga, medical relief, preservation of environment, including watersheds, forests, wildlife, preservation of monuments or places or objects of artistic or historical interest, and advancement of any other object of general public utility. Now, I am only referring to this definition of in the Income Tax Act so that we have a context of this. The definition of charitable activities under the GST law have been specifically defined separately. They are similar to the charitable purpose definition under the Income Tax Act. However, this is only limited for the purposes of the Income Tax Act. We will see what the definition is under the GST law. From what I have spoken about right now, the summary or the context for today's discussion, as I said in the beginning, we are going to be talking about charitable institutions. The constitution may be a trust or a society or a Section 8 company. These charitable institutions are engaged primarily in charitable or philanthropic nature of activities. There is absence of pecuniary benefit or profit motive. According to these organizations or these institutions, they are not engaged in a business activity. Now, having said all of this, we will now move to the scope of GST relating to charitable institutions. As we all know, definition of GST itself under Article 366 of the Constitution, and if we refer to the levy provisions under Section 9 of the GST Act also, we will all see that GST is a tax on supply of goods or services or both. So the key term is supply. it is not said that GST is a tax on income or on receipts or any such thing. GST is a tax on supply of goods or services or both. So we need to first identify what is the scope of supply, which is given in Section 7 of the CGST Act. Section 7, subsection 1 states that supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease, or disposal, made or agreed to be made for a consideration by a person in the course or furtherance of business. I would like to highlight three particular terms which we are going to concentrate on. We are going to concentrate on these three terms. So supply, basically it includes all forms of supply which are made or agreed to be made for a consideration by a person in the course or furtherance of business. All three terms have been defined in the CGST Act. We will proceed to scrutinize each term and find out whether the GST is applicable to charitable institutions or not. First, we come to the definition of person given under Section 2, Clause 84. Person includes an individual, HUF, company, firm, LLP, AOP, BOI, corporation established under any central act, state act, or body corporate incorporated by or under laws outside India, cooperative societies, local authorities, central government, societies, trust, every artificial juridical person. If you see the tiles that I have highlighted, you will see that the organizations that we are talking about, be it a Section 8 company or a cooperative society or a society or a trust or every other artificial juridical person, they are all covered by the definition of persons. So one aspect of what we are trying to figure out is covered, that a charitable institution, be it a trust or any other form, is covered by the definition of person. Next, we come to the definition of business, because supply says that it should be in the course or furtherance of business. So the definition of business includes any trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not for pecuniary benefit, any activity or transaction in connection with or incidental or ancillary to any trade, commerce, manufacture, etc. Any activity or transaction in the nature of trade, commerce, etc., whether or not there is volume, frequency, continuity, or regularity of such transaction. What this means, if we look at the first part of the definition, it says that any such trade, commerce, and other activities, similar activities, whether or not there is any pecuniary benefit. So where the charitable institution insists that we are not existing here for profit and therefore we are not in the business, the common definition of a business for the understanding of a layman might be that business is done by people to earn profit. However, for the purposes of the GST law, the definition of business certainly includes any activity, whether or not done for any pecuniary benefit or profit, and any activities or transaction in connection with such activities are also covered by the definition of business. They have gone one step further and stated that whether or not there is any frequency of the activity or regularity of the activity, so even a one-off transaction can be considered as a business. The Gujarat High Court, in one of the matters, has already dealt with this aspect of the definition of business. In this particular case, Nagri Eye Research Foundation is a trust which is engaged in supply of medicines to the needy persons at cost. So at a nominal cost, they only charge to cover the cost. So they had first approached the Advanced Ruling Authority of Gujarat to seek a ruling as to whether they are considered to be in business and whether they are required for registration and payment of GST. On receiving an adverse ruling, they approached the appellate authority. On receiving an adverse ruling at the appellate level, they approached the Gujarat High Court, And Gujarat High Court has categorically stated that for the purposes of the definition of business under Section 2, Clause 17, it is immaterial whether such a trade, commerce, or such activity is for pecuniary benefit or not. You may be collecting only the cost, you may not be earning profit. However, for the purposes of the GST law, you are still covered by the definition of business. Now, here I must refer to a landmark judgment under the Bombay Sales Tax Act 1959 in the case of Sai Publication Fund. Now, this matter had gone up to Supreme Court. The Supreme Court in this particular matter has stated that where the main activity of the trust does not fall within the meaning of business, any incidental or ancillary activity will also not be considered as business. The brief facts of this case were that there was this Sai Publication Fund, it was a trust formed with the primary object of spreading the message of Sai Baba of Shirdi. Now, in order to achieve this object of spreading the message of Sai Baba, the trust published books, pamphlets, and other literature containing Sai Baba's message, and then sold it at nominal charge only to meet its cost. The sale proceeds of this sale of this publication formed the property of the trust, and it could not be utilized for any other activity other than for advancement of the object of the trust, which was that spreading the message of Sai Baba of Shirdi. There was a specific provision made in the trust deed also that in the event of failure of the trust to carry on its objects, any remaining fund in its hands will be handed over to Shirdi Sansthan. The Supreme Court, while dealing with the issue as to whether this particular trust was a dealer for the purposes of payment of sales tax under the Bombay Sales Tax Act. Now, please bear in mind that the definition of business under the Bombay Sales Tax Act was amended, and this judgment is after the amendment. And the amended definition of business was very close or akin to the business definition that we have in GST. So whether or not an activity was carried out for the purposes of profit or not, it was deemed to be considered, or it was considered to be a business. Yet the Supreme Court, while dealing with this issue, stated that the question of profit motive or no profit motive will be relevant only when the person carries on any trade, commerce, manufacture, or adventure in the nature of trade, commerce, or manufacture. So the primary issue or the primary point that Supreme Court made here is that, yes, you are talking about sale of publications and other material or literature on which are goods on which you want to levy sales tax. However, this is an incidental activity to the main activity, and where the main activity itself, that is spreading the message of Sai Baba of Shirdi, that could not be fit into any of the clauses of trade, commerce, manufacture, and therefore it could not be considered as business. Any incidental activity can also not be considered as business. And the question of profit motive or non-profit motive would come into picture only when the first activity, the main activity, is to be considered as business. This judgment of the Supreme Court, in my opinion, still holds water. There have been advance rulings. For example, in Srimad Rajchandra Adhyatmik Satsang Sadhana Kendra, there was an advance ruling made to Maharashtra Advance Ruling Authority. This matter went up to appellate level. In both forums, the application as well as the appeal has been rejected. And right now the matter is lying at the Bombay High Court by way of a writ petition. The question in this advance ruling asked was whether the sale of spiritual products such as books, DVDs, etc. could be considered to be a supply attracting GST. The applicant in this case contended that the money earned from sale of such goods was used for main object. Now, the facts of the case in this case and Sai Publication Fund are quite similar. This particular trust has been formed to promote the message of certain guru and certain religion. And in order to achieve that particular primary object, they are selling goods such as DVDs or books which contain the message of that particular guru. And the question that they have asked, or the contention that they have made, is similar to what was stated in Sai Publication Fund, stating that where the main object itself cannot be considered as business, therefore the ancillary activity can also not be treated as business. The applicant in this advance ruling has very much placed reliance on Sai Publication Fund's judgment, as well as Gujarat Maritime Board, CIT versus Gujarat Maritime Board, wherein it was held that the primary or predominant object of the trust is where it is charitable. Any other object which might not be charitable, but which is incidental or ancillary to the dominant object, will also be considered as a charitable activity. The advance ruling authority held that there was no specific exemption to a registered charitable trust for supply of such goods under the GST law. The sale of spiritual products, which was incidental or ancillary to main charitable object, could be said to be business, and therefore sale of spiritual products was liable to GST. The appellate authority, while dealing with this appeal, has categorically stated that the Supreme Court judgment in Sai Publication Fund was under a different statute, and we are distinguishing it, and therefore the appeal was rejected. As I said, the matter is now at the High Court level. Next, we come to the definition of consideration. Consideration includes any payment made or to be made, whether in money or otherwise, in respect of or in response to or for the inducement of the supply of goods or services or both, whether by the recipient or any other person, or any monetary value of any act or forbearance in respect or in response to or for the inducement of supply. Consideration does not include any subsidy given by the state or central government and a deposit, unless the supplier applies such deposit as consideration for the supply. Now, by going through this definition, it is very clear that any money or any money's worth received by a person in respect of or in response to or for the inducement of supply will be considered as consideration. A question that comes up is donations received by charitable institutions. What happens? Can they be considered as consideration for any supply? To this, my answer is donations are gratuitous payments. They are not consideration for any inducement of supply. A person who gives donation, see, there may be cases where donation is given for a specific purpose, but generally donations, when they are given, there is no binding clause on the charitable organization that against this donation you will be doing this activity. If that is the case, definitely yes, that will be consideration for a supply. However, donations which are gratuitous in nature are not consideration for supply. They are not, therefore, donations are not liable to GST unless the trust is obligated to provide something in return against such donations. The CBIC has also clarified this issue by way of a circular in October 2019. They say that where the name of the donor is displayed in the recipient institution premises, in such a manner where it can be said that it is an expression of gratitude or public recognition of the donor's act of philanthropy, and it is not aimed at giving publicity to the donor in such manner that it would be mean advertising or it would mean promotion of his business, then it can be said that there is no supply. What is important here is that there should be no obligation or no quid pro quo on part of the recipient of the donation, that is the charitable institution, to do anything against such money that is received. So the CBIC circular at the end of it has clarified that where these three conditions are satisfied, then we will say that this donation is not liable to GST. What are these conditions? Condition number one, the gift or the donation is made to a charitable organization. Second, the payment has the character of gift or donation, and the purpose of giving this gift or donation is philanthropic. That is, it does not lead to any commercial gain. So if a charitable organization has received a donation, they have put up a bench for the benefit of people, and they put right the name of the donor. It is allowed. It will not be considered as a consideration against supply of a service or supply of goods. However, where there is a charitable organization or there is a temple which is celebrating a festival, and there are donations received against which banners and hoardings are put which advertise the business of the donor, that will be considered as a supply of service and will not be considered as a donation, and it will be liable to GST. To sum up as to what I have discussed till now, regarding scope of GST to charitable institutions, I had stated that where a charitable institution is considered as a person, it has supplied certain services or goods in the course or furtherance of business, and they are supplied for a consideration, then it will be treated or it will be liable to GST. From what we have seen, all these conditions are satisfied, and therefore charitable institutions are liable to be registered under GST law and pay and collect and pay GST unless they are specifically exempted by way of an exemption notification. Let us now come to the exemptions. What is the criteria for exemption from GST? I am first dealing with serial number 1 of notification number 12 of 2017 central tax rate dated 28th of June 2017, which we all know is the master notification or the exemption notification for services. So entry number 1 itself speaks of exemption to charitable institutions. It says services by an entity registered under section 12AA or 12AB of the Income Tax Act by way of activities which are specifically defined as charitable activities under that particular notification. So the criteria for exemption from GST for charitable organizations is a dual criteria. First part is that they should be entities which are registered under section 12AA or 12AB of the Income Tax Act, and the activities that they are providing or doing should specifically be covered by the definition of charitable activities given in notification number 12 by 2017. What are these activities that are covered by charitable activities definition in notification number 12 by 2017? Let's see. First, activities relating to public health by way of care or counseling of terminally ill persons or persons with severe physical or mental disability, care or counseling of persons afflicted with HIV or AIDS, care or counseling of persons addicted to a dependence forming substance such as narcotics, drugs, or alcohol. Please bear in mind that this is an exemption notification. We all are aware that exemption notifications are to be construed strictly. Whatever is specified in the definition of charitable activities for the purposes of exemption, only those activities are covered. On a lighter note on this particular aspect, they are providing exemption or they are covering care or counseling of persons addicted to dependence forming substance such as narcotics, drugs, and alcohol only. These days, people are addicted to social media. There are rehabilitation centers for detox from social media and mobile phones coming up everywhere. Now, although mobile phone or social media has become a dependence forming substance, that is not covered by the definition of charitable activities. So any care or counseling for such activity, although may very well be charitable, not covered for the purposes of exemption as charitable activities under the GST law. Next, we come to the second part of charitable activities, activities relating to public health by way of public awareness of preventive health, family planning, or prevention of HIV infection. The second part, so this was the first main part. The second part of charitable activities is activities relating to advancement of religion, spirituality, or yoga. The third part, activities relating to advancement of educational programs or skill development relating to abandoned, orphaned, or homeless children, physically or mentally abused and traumatized persons, prisoners, and persons over the age of 65 years residing in rural area. Please note that activities relating to advancement of educational programs, all such activities are not covered as charitable activities. Only the activities relating to abandoned, orphaned, homeless children, or physically or mentally abused persons, or prisoners, or persons over the age of 65, that too residing in rural area, are covered as charitable activities. Last part, activities relating to preservation of environment, including watershed, forests, and wildlife. These are the activities which are specifically defined as charitable activities in notification number 12. Only such activities are considered to be charitable activities for the purposes of exemption. I am repeating this. If you see the definition, you will realize that the exemption in notification 12 entry number 1 is very restrictive. It is given to charitable organizations which are registered under section 12AA or AB of the Income Tax Act and conducting activities which are charitable activities as defined. If they are conducting multiple activities, only such activities which are falling under the definition of charitable activities will get exemption. Other activities which are not covered by the definition of charitable activities will very much be liable for GST. One small another point is that this residing in rural area, this rural area has also been specifically defined in this notification. I have given the definition over here. You may refer to it if you wish to. Now, since we are talking about the definition of charitable activities, I am referring to certain advanced rulings that are that have happened on the subject of charitable activities. First, Dream Runners Foundation, Tamil Nadu AR in 2019. In this case, the applicant trust was registered under 12AA of the Income Tax Act and engaged in conducting public charitable activities. Now, since the year 2012, they were conducting a marathon named Dream Runners Half Marathon. They were collecting donations from runners who were participating as well as corporate donations. Then the amount that was received was utilized to cover the expenses required for the conduct of this marathon. And any balance lying after that was paid as donations to NGOs supporting the cause, or they were paid directly to the beneficiaries as donations. The question that was raised is whether this Dream Runners Foundation, the activity of conducting this marathon is a charitable activity and whether they are liable to be registered. The Tamil Nadu Advanced Ruling Authority held that the activity of conduct of marathon event does not fall under the definition of charitable activities given in the GST law. Though the money collected from the participants may be donated or used for further charitable activities, organizing the marathon itself is a separate supply of service, and that seems to be the primary activity here. So that is a service supplied to various participants, individuals and runner groups. The money collected from participants is a consideration towards the supply of service of organizing and conducting the marathon for the participants' conduct, and the same is liable to GST. Next, Maharashtra AR in 2018, Ecosan Services Foundation. The applicant is a non-profit organization registered under section 12AA, providing the services of sanitation capacity building through training, piloting and demonstration, awareness raising, research and development, and open dissemination of knowledge in sustainable sanitation and water management. They were supplying these services to all kinds of entities, private entities, as well as other trusts which were registered under 12AA. They were receiving donations or grants from various companies or persons. The question that they raised before the Advanced Ruling Authority was whether these aforesaid services provided to other NGOs as well as others amounts to provision of service and whether donations received are liable to GST. It was held by the AAR that services relating to sanitation provided to various entities, including non-profit organizations, are exempt since they are relating to preservation of environment, which is covered as the last clause of charitable activities. Next, Gujarat AAR, All India Disaster Mitigation Institute. The applicant is a charitable trust established for community-based research, policy analysis, planning, and technical assistance for the purposes of enhancing the prevention, mitigation, and management of disasters and reorientation of relief and reconstruction of local initiatives. This trust is also registered under Section 12AA of the Income Tax Act. The Advanced Ruling Authority held that these activities are also covered by the definition of charitable activities, and the trust is eligible to claim the exemption under entry number 1 of notification number 12. We now come to another aspect of charitable activities, activities relating to advancement of religion, spirituality, and yoga, which was the second clause or second part of the definition of charitable activities. There is a circular of CBIC issued in the year 2018, which is dealing with this particular subject, issuing clarifications as to what is exempt from tax and what is liable to tax under the GST law. According to this circular, any fee or consideration which is charged in any form from the participants for participating in a religious yoga or meditation program or any camp meant for advancement of religion, spirituality, or yoga, such fees or consideration received in any form, be it donation or fees, they are exempt because they are received for the purposes of advancement of religion or spirituality or yoga. Next, any residential programs or camps where the fee charged includes the cost of boarding and lodging, so long as the primary or predominant activity, objective, and purpose of such residential program or camp is advancement of religion, spirituality, or yoga are also exempt. However, where the charitable trust merely provides accommodation and serve food and drinks, and the advancement of religion or spirituality or yoga is a secondary activity, and the primary activity is accommodation and food and drinks, then whatever form you may have collected the money as fee, or even you may have collected the fees as donation, we will still tax it under GST, because the primary intention of this particular activity is not advancement of religion, spirituality, or yoga. Next, activities such as holding fitness camps or classes such as those in aerobics, dance, music, etc., are also not relating to advancement of religion, spirituality, or yoga. Therefore, aerobics, dance, music, etc., all such classes are liable to GST. They are not covered under this particular clause as charitable activities. We move on to another aspect of religious activities: conduct of religious ceremony and renting of precincts of religious premises. Now, entry number 13 of notification number 12, that is the exemption notification, states that services by a person, any person, by way of conduct of any religious ceremony. So the first clause clearly states that any person, be it a charitable organization or any other person, where such person provides services by way of conduct of religious ceremony. Religious ceremonies, as we all know, are life cycle rituals which include certain kinds of pujas which are prescribed by ancient literature or any other customs. So such religious ceremonies, when they are conducted, they are exempt from GST, no conditions attached. Second clause states that renting of precincts of a religious place meant for general public, owned or managed by an entity registered as a charitable or religious trust under 12AA or AB or 1023 clause 5 or 1023 BBA. So basically, this second clause exemption is applicable only where this service is provided by an entity which is registered as a charitable trust, and they are renting precincts of a religious place meant for general public. Now, please bear in mind, religious place, general public are terms which are again defined in this very notification itself. So this notification says religious place means a place which is primarily meant for conduct of prayers or worship pertaining to a religion, meditation, or spirituality. Secondly, it should be meant for general public. What is general public? General public means the body of people at large, sufficiently defined by some common quality of public or impersonal nature. So a private temple, if that area is given on rent, that cannot be considered as renting of precincts of a religious place meant for general public. So that should be the religious place should be open to the general public for its use. Only then renting of the precincts of such religious place can be considered to be for exemption purposes. Third part, precincts. Now precincts has not been defined in the notification. However, the dictionary meaning of precincts is an area within the walls or perceived boundaries of a particular building or place, an enclosed or clearly defined area of ground around a cathedral, church, temple, etc. So we all know, all our majority of our temples have a large area surrounding the main temple. So that we can consider as a precinct, which is an area enclosed by walls or perceived boundaries of a particular building. So this renting of precincts of a religious place meant for general public by a charitable or religious trust, which is registered under section 12AA or AB under the Income Tax Act, is exempt. However, apart from these conditions, there are more conditions attached to this exemption. So this exemption is further subjected to the following conditions: where rooms have been rented in the precincts, the room charges cannot be more than 1,000 rupees per day. Where the premises has been rented, or community hall or Kalyana Mandapam or open area within the precinct has been rented out, the charges should not be 10,000 rupees or more per day. And where shops, we all know that the precincts of temples have contain many shops which sell multiple articles. So those shops which have been rented out, or other businesses for where spaces have been rented out, the charges again should not be more than 10,000 rupees per month. If the charges are more than 1,000 or 10,000 rupees as have been prescribed, then this exemption is not applicable, and the entire amount that is received is liable to GST. I am moving ahead with the next aspect of it. After we have covered the religious aspect of it, now we come to healthcare services. The reason I am covering healthcare services is because many hospitals, or majority of the hospitals, are run by charitable institutions. So it is one of the major activities that is undertaken. Please bear in mind that there are two separate exemption entries that we are talking about. One is exemption to charitable activities by a charitable or religious trust, which is registered in entry number 1. As we have seen, the charitable activities are very restrictive to awareness of public or care for certain specified abnormalities, or for dependence forming substances, as we talked about, or for HIV or AIDS. So any general healthcare services that are provided may not be covered by charitable activities. However, even if they are not covered as charitable activities, or even if the hospital is not run by a charitable organization but by a private entity, healthcare services, as I had said in the beginning, GST being a transaction-based tax, the exemption is to a particular activity. So this exemption that we are talking about is for the healthcare services activity. Entry number 74 says services by way of healthcare services by a clinical establishment. Next part we can ignore, the authorized medical practitioner or paramedics. We are concentrating on this part, healthcare services by a clinical establishment. Second part, again, services by way of transportation of a patient in an ambulance other than those specified in A above. If you see the definition of healthcare services, it also includes transportation of patients. However, there are many charitable organizations which run a facility of providing an ambulance to patients who are in need. They may be charging a nominal amount. So such services, even if they are not covered by charitable activities, they will be covered by the exemption for healthcare services in this 74 clause B. Now, healthcare services have been specifically defined to mean any service by way of diagnosis or treatment or care for illness, injury, deformity, abnormality, or pregnancy in any recognized system of medicines in India, and includes services by way of transportation of the patient to and from clinical establishment, but does not include hair transplant or cosmetic plastic surgery, except when such hair transplant or plastic surgery or cosmetic surgery is required to be undertaken to reconstruct anatomy or functions of the body affected due to congenital defects or developmental abnormalities. So when it is absolutely essential to save the person, then they are covered. Otherwise, plastic surgeries or hair transplant is not covered by healthcare services. Next, they should be provided by a clinical establishment. Clinical establishment has also been defined to mean a hospital, nursing home, clinic, sanatorium, or any other institution by whatever name called that offers these services or facilities requiring diagnosis or treatment or care for illness, injury, deformity, abnormality in any recognized system of medicines, or a place established as an independent entity. This is for the pathology labs. All right, investigative services of diseases. Now, we have seen that healthcare services have been defined, clinical establishments have been defined. We can conclude with the limited, for the limited context of charitable institutions, that healthcare services provided by charitable hospitals at concessional rate are exempt from GST, even if they are not covered by charitable activities under notification entry number 1, they are still exempt from GST under entry number 74. Having said this, I am now dealing with certain notable advance rulings relating to healthcare services. The majority of these advance rulings, you will see, are dealing with the issue of services, healthcare services provided to inpatients versus outpatients. Inpatients are those patients who are admitted into the hospital. Medicines are given, certain your food is given, or any other implants are used in order to provide them the healthcare services to make them better. Outpatients are, as we commonly call as OPD, that they are the people who visit your hospital, they do not get admitted, and healthcare services are given to them. Now, majority of them deal with the issue of supply of medicines, whether it's a composite supply. So in this regard, first is KIMS Healthcare Management, Kerala AAR, which says that supply of medicines, consumables, implants used in the course of providing healthcare services to inpatients for diagnosis or treatment by applicant hospital, being naturally bundled and provided in conjunction with each other, would be considered as composite supply, eligible for exemption under the category of healthcare services. Next, Piranha Public Charitable Trust. This was also a charitable trust running a hospital, where Maharashtra AR has stated that supply of medicines, surgical items, implants, consumables, other allied items provided by the hospital through the hospital-owned pharmacy, as well as food, room on rent to the inpatient, is part of composite supply of healthcare treatment and hence not taxable. And the pharmacy run by the hospital, which is dispensing medicines or selling medicines to outpatients or any bystanders, as a regular pharmacy would do, can be treated as an individual supply of medicines, and GST is liable to be paid. The gist of this being that any room rent charged or food supplied or medicines provided or surgical items or implants provided in the course of providing healthcare services, the primary service being healthcare service, are all exempt, and those medicines or implants or any other surgical items supplied to outsiders who are not patients which are admitted will be considered as a regular sale. Next, Karnataka AAR has stated that supply of food and beverages by the hospital to patients is naturally bundled with the healthcare service and is eligible for exemption. Divya Jeevan Healthcare LLP, Gujarat AAR, this in this particular case, the applicant had stated that he intended to establish a hospital to provide healthcare services, and he had devised a plan. He was going on a subscription model where you pay 10 lakh rupees and you are medical healthcare services are covered for the next 20 years. So in this regard, the applicant had approached the Advanced Ruling Authority asking if this would be considered as healthcare service. The Advanced Ruling Authority has stated yes, this is covered under the exemption entry number 74 as healthcare service. Next, Gujarat Appellate Authority for Advanced Ruling. The question raised was with regard to occupational health checkups or preventive care. Now, in this particular case, this hospital had contracted with companies to provide health checkups to their employees or preventive care packages. They were also intending to supply these services by taking up health checkups at the employers or the company's premises. So an advance ruling was, the question was raised as to whether this is covered by healthcare services. The Gujarat Appellate Authority has stated that entry number 74 is wide enough to cover general medical services consisting of prevention, diagnosis, care, whether they are supplied at the premises of the hospital or delivered to outpatients clinics, at homes, in firms, schools, or even by phone or internet or other means. There is no difference when such healthcare services are provided by a clinical establishment to a patient inside the establishment or outside of the establishment. In Oswal Industries case, this particular applicant had set up a wellness resort sort of a thing, and wellness facilities were provided such as naturopathy, Ayurveda, yoga, meditation, physiotherapy, and special therapy. The appellate authority held that this is not liable or not, I'm sorry, this is not eligible for exemption as healthcare service, primarily because the observation was that there was a mandatory condition for stay of minimum 7 days when you opt for this treatment. So you had to stay for 7 days, and then the doctor would diagnose you and give you whatever your diet would be controlled, and naturopathy treatment or Ayurvedic treatment would be given to you, and all those things. And the charges that you pay were primarily dependent on the category of room that you were selecting. Therefore, the appellate authority came to the conclusion, or rather the advanced ruling authority came to the conclusion, and the appellate authority agreed that this is primarily an accommodation service, and supply of these other services is only ancillary, and therefore this is liable to GST as accommodation service. Similar issue has happened with this Corbett Nature Reserve, Uttarakhand AR. They triple AR, they said that this has been marketed and advertised as accommodation with naturopathy and all these things. So therefore, this is liable to GST as accommodation service. Lastly, Optm Healthcare Private Limited, they stated here that applicants' plant-based preparations were not in accordance with formulae described in any authoritative book of Ayurveda specified in the first schedule of the Drugs and Cosmetics Act. Now, although your healthcare services recognized system, Ayurveda is covered as a recognized system of medicine. However, the product that you are dealing with and what you want to sell as medicaments as Ayurvedic product must satisfy the conditions given in the first schedule of the Drugs and Cosmetics Act, that it has to be in accordance with the formula described in any authoritative book that has been given in the first schedule. So since the plant-based preparation that this applicant was trying to sell as an Ayurvedic product was not in accordance with the formula given in any authoritative book of Ayurveda, the applicant was not considered to be a clinical establishment offering treatment in the recognized Ayurvedic system, and therefore the services were not considered as healthcare services. On a similar line, since I am covering healthcare services, I am also covering these services by rehabilitation professionals at rehabilitation centers established by charitable trusts. Now, these are the services that are provided by rehabilitation professionals who are recognized under the Rehabilitation Council of India Act. But these services are provided at medical establishments or educational institutions or rehabilitation centers which are established by the central government, state government, or an entity registered under 12AA or AB. In such cases, the services are eligible for exemption. I now come to the next part, services by educational institutions. Again, the reason that I'm covering educational institutions is that many of the charitable organizations are running schools, colleges. So entry number 66 of notification number 12 by 2017 states as follows: services provided by an educational institution to its students, faculty, and staff. So this clause A that we are dealing with covers all services which are provided by an educational institution to its students, faculty, and staff. It could be any services. It could be supply of food by this educational institution. Educational institution may have a Xerox copying machine in its premises where students can go pay for the copies, faculties can go pay for the copies, or staff can go and then they can get the copies. That service will also be covered because that's a service being provided by an educational institution to its students, faculty, and staff, or any other services that are provided by an educational institution to its student, faculty, staff is covered by the exemption entry. Again, the charitable activities definition, the educational activities or awareness activities with regard to education, as we saw, are very limited to prisoners or to certain persons who have suffered trauma, or to persons who are above the age of 65 years living in rural areas. So when an activity is covered under charitable activity, it may be exempt over there. However, even if it is not covered, and the institution that is the charitable organization that we are talking about, that institution can be covered by the definition of educational institution given in the notification, then such services provided by such institution to its student, faculty, and staff will get covered by this entry. What is educational institution? It means an institution providing services by way of preschool education or education up to high school, higher secondary school or equivalent. So HSC or equivalent. Next, education as part of a curriculum for obtaining qualification recognized by any law for the time being in force. And third part, education as part of an approved vocational education course. So these three categories of institutions are covered by the definition or by the term educational institution. So where it is covered, so it's a school set up by a charitable organization, or it's a college set up by a charitable organization, and the curriculum, it is providing education as part of curriculum for obtaining a qualification which is recognized, let's say a BCom or a BA or any other qualification which is recognized, then it is covered as educational institution and it is eligible for this exemption. Next part, clause AA of this entry number 66 states that services provided by an educational institution by way of conduct of entrance examination against consideration in the form of entrance fee is also exempt. Again, this should be supplied by an educational institution. For the limited purposes of this clause, our school boards, the secondary certificate board and the higher secondary, they are covered by the term educational institution only for the limited purposes of conducting exams. Third part, that is clause B, services. Now, this is covering services that are provided to an educational institution by other persons, and then they are eligible for exemption. What are these services? Transportation of students, faculty, and staff, catering, including any midday meal scheme sponsored by the central government or state government or union territory, security or cleaning or housekeeping services performed in such educational institution. Please bear in mind that these first three clauses, 1, 2, and 3, this exemption is only applicable where such services are supplied to an educational institution which is providing preschool education and education up to higher secondary. That is, when these services are provided to this first category of educational institution, only there the exemption is applicable. Where such services are provided to category 2 or category 3, this exemption is not applicable. They will be liable to GST. Clause number 4, services relating to admission to or conduct of examination by such institution is exempt. Lastly, supply of online educational journals or periodicals. Again, this exemption is only applicable when such supply of online educational journals or periodical service is supplied to category 2 or category 3. So where it is provided to a school, the exemption is not applicable. Where it's a college, for the simplicity of understanding, I'm referring to these as college or any institute which is providing approved vocational course, there this exemption is applicable. So 1 to 3 only applicable to first category, 5 only applicable to category 2 and 3. Again, these are exemption to services which are provided to an educational institution. Services provided by an educational institution to its student, faculty, and staff, all of them are exempt. I am moving ahead to other notable exemptions which are somewhere related to entities which are conducting charitable activities. First, services by an old age home which is run by central or state government or by an entity registered under section 12AA or AB. Again, you will see at many places here as well, the conditions are very specific. Only when you satisfy these conditions can you claim the exemption. First condition is that you should be an entity which is registered under 12AA or AB of the Income Tax Act. And second condition is that these services of old age home should be provided to residents who are aged 60 years or more. Third condition is that the consideration that you are charging should not be more than 25,000 rupees per member per month. And this consideration of 25,000 or less should include your boarding charges, lodging, and maintenance. So your all-inclusive charges that you are charging for stay at this old age home should not be more than 25,000. The service should be supplied to persons who are not aged more than 60 years. I'm sorry, should be supplied to people who are aged 60 years or more. It should not be to people who are below 60 years of age. And you should be registered as an entity registered under 12AA or EB. Only then can you claim this exemption. Next, services of public libraries by way of lending of books, publications, or any other knowledge enhancing content or material. Services by a specified organization in respect of a religious pilgrimage facilitated by the Government of India under bilateral agreement. Services by way of public conveniences such as provision of facilities of bathroom, washrooms, laboratories, urinal, or toilets. So where any charitable organization is running a public convenience or a urinal or any other washroom or any such thing, that even if it is not covered by charitable activities, it can get covered by this exemption entry. Entry number 77, a part of this entry we are going to refer to now, and the last part of it we are going to deal with when we are talking about cooperative society. The entry reads services by an unincorporated body or a non-profit entity registered under any law for the time being in force to its own members by way of reimbursement of charges or share of contribution as a trade union. So at the beginning we saw NGO. The term NGO covers a trade union also. So where it's a trade union, it's an unincorporated body or non-profit entity registered under any law. It's not necessary that these have to be registered under the Income Tax Act under any specific section. So any society or a cooperative society or a trust that is registered under the relevant laws of the state or the central law, and it's a trade union, and any charges are collected from its own members by way of reimbursement of charges or share of contribution for conducting the activities, then they are exempt. Next, any charges, reimbursement of charges or share of contribution for provision of carrying out any activity which is exempt from the levy of GST, that is also covered by the exemption entry. Next, entry number 77A, services provided by an unincorporated body or a non-profit entity registered under any law for the time being in force, engaged in the activities relating to the welfare of industrial or agricultural labor or farmers, or promotion of trade, commerce, industry, agriculture, art, science. So these, in my understanding, are this entry is primarily referring to those societies which are registered under the Societies Registration Act of 1860. and they are formed for promotion of trade, commerce, or art or science or literature or culture. So these charitable activities that are undertaken, or these other activities as well, so any services provided by such organizations to its own members against consideration in the form of membership. To summarize this entry, membership fees collected by such institutions up to rupees 1000 per member per year is exempt. Now, the department is definitely going to interpret this entry stating that if the membership fee is up to 1000 rupees per member per year, you are eligible for exemption. If it is more than 1000 rupees, the entire amount is liable to GST. However, the other interpretation of this, which is the problem with cooperative housing societies, the controversy as well, is going to be that even if the membership fee exceeds 1000 rupees in the case of institution that has been described over here, then let's say the membership fees are 2000 rupees per member per year, then only 1000 rupees should be liable to GST, because exemption has been granted up to an amount of 1000 rupees per member per year. So this controversy, for whatever reason, has not come up till now. The controversy with regard to entry number 77 has come up. Let's see if this also comes up in the near future. Last entry in these other notable exemptions, entry number 80. Now here, the notification issued yesterday after the 47th GST Council, this particular entry has been amended. In the 47th GST Council concluded on 29th of June, they had recommended that services by way of training or coaching in recreational activities relating to arts and culture. So this particular entry, the exemption will be restricted only where the supply is by an individual, and therefore it was understood that this charitable entities that were providing these services would not be eligible for this exemption. However, yesterday this particular rate notification has come, notification number 3 of 2022 central tax rate. Therefore, with effect from 18th of July 2022, services by way of training or coaching in recreational activities relating to arts or culture by an individual, or by way of training or coaching in sports by charitable entities registered under section 12 AA or AB shall be exempt. Therefore, any recreational activities relating to arts or culture that is provided by charitable entities will not get covered by this exemption. This particular arts and culture part will be restricted only when such supplies are made by individuals. Therefore, certain charitable organizations which were formed to provide services with regard to arts and culture and were claiming exemption from GST under this entry will have to do some restructuring. All these exemptions that we have spoken about in CGST, identical entries are also present in notification number 9 of 2017 integrated tax. So IGST also same notification is there with covering same entries of exemption. However, one more additional entry is covered by notification number 9 of 2017, which states that services received from a provider of service located in a non-taxable territory by an entity registered under section 12AA of the Income Tax Act for the purposes of providing charitable activities is exempt. What this means is that import of services, when the provider is located in the non-taxable territory and the charitable organization is present in India, then such import of services will not be liable to GST under RCM, because such activities, such services are exempt by virtue of this entry. This exemption, however, does not apply to OIDAR services supplied by a provider of service which is located in non-taxable territory. Such supplier is required to obtain registration and pay tax under forward charge, or ocean freight services. Now, one peculiar point that needs to be noted is that when Income Tax Act got amended and this new section 12AB was inserted, all these entries were amended subsequently to include reference to 12AA as well as 12AB of the Income Tax Act. This particular entry has not been amended. My understanding is that this is due to oversight, and this entry needs to be amended to also cover entities which are registered under 12AA or 12AB of the Income Tax Act. One more aspect I am covering of charitable institutions is that of hostel accommodation services. Many charitable institutions are running hostels. They may be for working professionals, they may be for ladies, they may be for students. So what is the status of hostel accommodation or hostels run by charitable institutions? CBIC has issued circular in 2018, wherein it has clearly stated that hostel accommodation services do not fall within the ambit of charitable activities as defined in the notification number 12. We have already seen the definition. So hostel accommodation services are nowhere covered by charitable activities. Therefore, the circular had stated that these are regular accommodation services, and where the accommodation charges are below 1,000 rupees, there is a separate entry of exemption for accommodation services. They have stated charges up to 1,000 rupees will be exempt. Above that, up to 7,500, or they were given certain categories up to 5,000, 7,500, 12%, 18%. All right. Now they had stated that where the charges collected are up to 1,000 rupees or equivalent, they are exempt under the entry for accommodation services. Please bear in mind, the 47 GST Council meeting also discussed this, and they have removed this exemption on accommodation services up to 1,000. Now, any charges, I think up to 7,500 are liable for 12% GST, above 7,500 are 18% GST. So if you consider this particular position of amendment that has been enacted with effect from 18th of July 2022, then as per this circular, they are to be considered as accommodation services, and all charges will be liable to GST because they are not considered as charitable activity. However, Karnataka High Court, in this one particular case that I have referred to over here, had stated that where residential premises were rented as hostel to students and working professionals, then that was covered as residential dwelling being used for residence. So there is a separate exemption entry in serial number 13, which says that service of renting out of residential dwelling for residential use. Now, when such residential dwelling was given as a hostel to students, there it was stated, because the advanced ruling authority as well as appellate authority had given rulings against the applicant, and the applicant approached the Karnataka High Court by way of a writ, and they stated that these will be covered by residential dwellings and not as accommodation services, because this is not a hotel or inn or guest house or whatever it is. However, these are residential premises rented as hostel, and they will be considered as residence and eligible for exemption in that particular entry. Now, on a case-to-case basis, we will have to see whether a particular hostel given out can fall under serial number 13 so as to be covered by way of exemption entry of residence. If not, if it is going to be covered by the supply of accommodation services, then the exemption up to 1,000 rupees is gone from 18th of July. Next aspect of charitable institutions, taxability of supplies made free of cost. Now, there are many supplies that are made free of cost by charitable institutions also. So normally, since there is no money flowing in, or there is no other consideration in kind also, therefore, supplies of goods or services or both made without consideration shall not be liable to tax. However, there are certain transactions or certain activities where they fall under Schedule 1 of the CGST Act. They will be liable to GST irrespective of the fact that they are made without consideration. A few examples of these are permanent transfer or disposal of business assets, where input tax credit was availed on such assets by the charitable institution. So where the charitable institution is registered, it has claimed input tax credit, and any permanent transfer or disposal, even without consideration, shall be considered as a supply under Schedule 1. Supply of goods or services are both made to a related person or a distinct person as specified in Section 25, even if made without consideration, shall be considered as supply. and valuation provisions will kick in, and GST will have to be paid. The next part, what is the impact on input tax credit? Now, since we all have seen that in case of charitable institutions, in their output turnover, certain turnover may be taxable, certain other part of turnover may be exempt from tax. Therefore, provisions of section 17 subsection 2 come into picture, 17 to 17.3, read with rule 42 and rule 43 of the CGST rules. Section 17 subsection 2 states that ITC shall be restricted only to that part of the inward supplies which are used for taxable supplies, and inward supplies used for exempt supplies, the ITC will not be available. Where there are common supplies, then proportionate reversal of common ITC will have to be done in accordance with rule 42 and 43 of CGST rules. It should also be noted that reverse charge mechanism or tax payable under reverse charge is very much applicable to charitable institutions. They must pay the tax under reverse charge. The eligibility or otherwise of the input tax credit shall depend on whether the output services or goods are liable to GST as that of a normal taxpayer. Lastly, what is the registration requirement in case of charitable institution? If it is in exclusive supply of goods, then we all know that the limit is 40 lakh and 20 lakh in case of special category states. Majority of the charitable organizations are providing services as well as goods, so limit of 20 lakh will be applicable, 10 lakh in case of special category states. Where all of the activities of the charitable institution are covered by one or the other entry of exemption notification, and therefore the entire turnover is exempt from tax, then such persons who are engaged exclusively in the business of supplying goods that are wholly exempt are not liable for registration under section 23 of the CGST Act. While calculating the aggregate turnover, one must remember that it includes taxable supplies, exempt supplies, including supplies which are not leviable to GST. Provisions of section 24 relating to compulsory registration very much apply to charitable institutions as well. Therefore, where they are receiving any supplies which are liable to reverse charge, or they are supplying any interstate supplies, even if their turnover does not cross the 20 lakh threshold, they may be required to take registration under the GST Act. With this, I have finished the provisions relating to charitable institutions. I am now going to talk a little about cooperative societies, primarily with emphasis on the cooperative housing societies. When we talk about a cooperative society, what do we mean? ICA has defined a cooperative as an autonomous association of persons who are united voluntarily to meet their common economic, social, or cultural needs and aspirations through a jointly owned and democratically controlled enterprise. A cooperative society works on the principle of self-help, mutual help, and the primary goal of providing support to its members. So the difference, if I may say, between NGOs or societies which are formed under the Societies Registration Act for charitable purposes and cooperative societies is that the NGOs or charitable institutions are formed with the intention of benefiting certain sections of public or public at large, whereas cooperative societies are formed with the primary intention of providing support or benefit to the constituent members of the cooperative society. Cooperative societies are governed by the State Cooperative Societies Act. Please bear in mind, cooperation is a subject which is covered by the state as well as the union list, that is the concurrent list. So the states as well as the central government can make form legislation with respect to cooperative societies. So cooperative societies which have operations limited to a particular state are governed by the State Cooperative Societies Act. For example, in Maharashtra, it is the Maharashtra Cooperative Societies Act. Where they have presence over multiple states, then they are governed by the Multi-State Cooperative Societies Act, which is a central legislation. Cooperative societies may be for profit or may not be for profit. the largest or the most prominent examples, India being the pioneer or the largest, being known in the world as the revolution caused by the cooperation movement in India. And ever since independence, India has given primary outlook, or rather emphasis, on the cooperation movement, to develop the cooperation movement in India. The biggest example that we have is the White Revolution, the cooperative movement in the form of Amul, as well as the Green Revolution. So the cooperation movement was born out of the poor and needy people who were deprived of certain amenities for their growth. They came together, they decided that they will help each other and grow together. That's the whole point of a cooperative society. So it's not necessary that a cooperative society will only be for non-profit purposes. It could be also for profit. Certain types of cooperative societies are producer society, agricultural marketing society, consumer society. Even cooperative banks are covered by cooperative societies. The last one that we are going to deal with today is a cooperative housing society. Now, all the others, if you see, for example, a cooperative bank is formed as a cooperative society. However, it is in the business of banking. Other forms of society also are very much in the business. They are for profit, and therefore they are regular taxpayers under GST. We are not covering those. As I had said in the beginning, the common thread in the subject that is given to me today is not for profit organizations. And since cooperative societies are covered, we are talking today about cooperative housing societies. When I talk about cooperative society or cooperative housing society, we must begin with the principle of mutuality. I am not going to go into the depths of the Supreme Court judgment in the case of Calcutta Club Limited or principle of mutuality, especially in the service tax and the sales tax era. The primary reason being that under the GST law, by the Finance Act 2021, clause AA was inserted in section 7 subsection 1, that is the scope of supply, with retrospective effect from 1st of July 2017, which states that supply includes activities or transactions by a person other than an individual to its members or constituents, or vice versa, for cash, deferred payment, or other valuable consideration. And for the purposes of this clause, it is clarified that notwithstanding anything contained in any other law for the time being in force, or any judgment, decree, order of any court, tribunal, or authority, the person and its members or constituents shall be deemed to be two separate persons, and supply of activities or transactions inter se shall be deemed to take place from one person to another. So the whole crux of principle of mutuality, which states that where members have come together and formed an entity for their own benefit, they cannot sell something or they cannot provide services to themselves, and therefore there cannot be a tax on activities or transactions between the members and the society. This whole premise was given a bypass by stating that principle of mutuality does not apply to GST law, and therefore we will not go in detail as to the controversy of principle of mutuality. We will proceed with the observation that with retrospective effect, clause AA has been inserted, it has been notified also, and therefore principle of mutuality does not apply to cooperative housing societies. Since we have concluded that principle of mutuality does not apply, and therefore it is covered by scope of supply by way of a deeming fiction, and therefore since it includes the activities or transactions or person by members for cash or deferred payment or other valuable consideration, we must then look forward that whether they are covered by the definition of person. Yes, cooperative societies are covered by definition of person. Secondly, whether they are in business. Now here there are two arguments. One school of thought saying that cooperative societies cannot be considered to be in business because they are only procuring services from third parties and for the benefit of the members, and therefore they are not in any business. However, the department is certain that cooperative societies are very much in business. There have been multiple advance rulings also to this effect. Third part, whether there is consideration. Here as well, there is an argument against levy of GST, which says that even if Section 7 has been retrospectively amended, scope of supply has been amended to do away with principle of mutuality, cooperative societies will still not be liable to GST because there is no consideration. However, this argument also needs to be tested. It has not been tested in any court of law. So in due course, where such argument is taken up at any forum, as per my understanding, it can only be done at the High Court or the Supreme Court level. Then there will be a little more clarity as to whether this contention stands. Now, once we have concluded that all these conditions are satisfied, assuming that they are satisfied, let us move ahead and see whether there is any exemption entry that is covering this particular transaction. So when we talked about entry number 77, I had stated that the latter part we will talk about at the end. So what does this exemption entry state? Service by an unincorporated body or a non-profit entity registered under any law for the time being in force to its own members by way of reimbursement of charges or share of contribution for the provision of carrying out any activity which is exempt from levy of GST and up to an amount of 7,500 per month per member for sourcing of goods or services from a third person for the common use of its members in a housing society or a residential complex. So clause C is very specific to a housing society or a residential complex where amounts are collected from the members and for the purposes of sourcing of goods or services from third persons, be it for electricity, water, or maintenance or repairs of the housing society or the building. So when such charges are collected, what we commonly know as maintenance charges or by whatever name called. So these maintenance charges, when they are collected, this exemption entry grants exemption up to 7,500. Under service tax law, it was 5,000. At the beginning of the GST law, they had given exemption up to 5,000 rupees. Then this was increased to 7,500. Now, according to this, what is the registration requirement for a cooperative housing society? We all know that since this is a service, the aggregate turnover threshold that is applicable is of 20 lakh rupees. So where, and this is coming directly from the CBIC circular. So where the turnover is more than 20 lakh rupees of a particular residents welfare association or a society. So where the aggregate turnover calculated as a total of taxable, exempt, all of it together is more than 20 lakh rupees. And where the monthly maintenance charges are more than 7,500, then this obviously this exemption is not applicable and therefore they will be required to be registered. Where it is more than 20 lakhs, however, the monthly maintenance charges are less than or equal to 7,500 rupees, they are eligible for exemption. And if their entire turnover is exempt from tax, as we have seen under section 23, they can do away or they can avoid taking registration under GST because they are eligible to do that. If the turnover is less than 20 lakh rupees, then irrespective of whether the maintenance charges are more than or less than 7,500 rupees, they are still exempt because they are not liable for registration at all. They have not crossed the threshold of 20 lakhs. Therefore, only when they cross 20 lakhs turnover, they will be required to take registration. Only when they are registered will they be required to collect GST, and the question of exemption or otherwise under entry number 77 will come into picture. Therefore, where the turnover is less than 20 lakh, even if the charges are more than 7,500, they need not collect GST because they are not registered. Let us now come to another clarification by the CBIC, which relates to the issue of monthly contribution charged by the RWA or the society from its members. In this particular circular of 2019, they had stated that the exemption from GST on maintenance charges charged by RWA from its members is available only if such charges do not exceed 7,500 per month per member. In case the charges exceed 7,500, then the entire amount is taxable, which is directly in contrast with the CBIC flyer that was issued in the year 2017, based on which many of the cooperative societies were collecting only GST only on the amount which exceeded 7,500. The circular itself has given an example where 9,000 rupees are collected. This circular states that the GST at 18% is to be payable, shall be payable on the entire 9,000 and not on 1,500. Whereas it's a fact that many cooperative societies have relied on that flyer and have collected GST only on 1,500. Now, many advance rulings were filed. Almost all of them, rather not almost, all of them have gone against the applicants. In one particular case, the matter went up to High Court. So Madras High Court writ petition was filed challenging a particular AAR order which said that the entire tax, entire contribution of 9,000 rupees shall be liable to GST. They also challenged this particular circular. They contended that the CBIC flyer that I have discussed about in 2017, it categorically stated, because in that flyer also they had given an example stating that you would be required to pay GST only on 1,500 rupees. They then said that in 2019, one particular AAR ruling stated that if the contribution exceeded 7,500, the very entitlement of the exemption stands defeated and the entire amount shall be liable to GST. After this advance ruling was issued, this particular circular was issued towing the line of the AAR and stating that yes, you will have to pay GST on the entire amount. The court, Madras High Court, in this particular case observed that the plain words employed in entry number 77 of this particular notification, which says that amount up to 7,500 can only be interpreted to state that any contribution only which is in excess of 7,500 can be made liable to tax. The term up to hardly needs to be defined and connotes an upper limit. It is interchangeable with the term till and means that any amount till the ceiling of 7,500 will be exempt. The conclusion of the advance ruling authority as well as circular number 109 to the effect that any contribution above 7,500 would disentitle the RWA to the exemption is contrary to the express language of this entry, and both the advance ruling as well as this particular circular stand quashed. They had stated that only contributions in excess of 7,500 would be taxable. Now, after this, again, a lot of controversy was created, a lot of confusion was created as to whether all societies should start charging, who had already started paying tax on the entire amount should start charging only on the amount exceeding 7,500. The status of this is that the Union of India has gone into appeal. This was a single bench judgment. They have gone in appeal. Now this matter is before the division bench, and the division bench has accepted or admitted the appeal, and they have also stayed the quashing of this circular. Therefore, this circular still is in existence and this matter is sub judice. So when this matter is finally decided, the fate of the cooperative societies will be decided there. Lastly, I come to certain valuation issues which are faced in calculating maintenance charges. Please bear in mind, when I said that an entire session of 2 hours will be required, I have only touched upon the surfaces of controversies. If you go to deal with each particular aspect of this controversy, each controversy will take an hour. Now, with regard to property tax and water tax, the CBIC flyer that is being issued states that services provided by the central government, state government, union territory, local authority to a person other than a business entity is exempt from GST. So property tax, water tax, if collected by the cooperative society on behalf of the MCGM from individual flat owners, then GST is not leviable. Please bear in mind, they are categorically stating And these flyers as well as circulars, many a times, instead of clarifying the position, have turned up causing more confusion or not helping anybody by choosing such words. They have carefully chosen their words to state that where services that are provided by the central government to a non-business entity are exempt. Therefore, where society is collecting these property tax on and paying on behalf of the MCGM from individual flat owners. So, does it mean that the property tax bill that is coming has to be in the name of each individual person, or the water tax bill? What happens to the common water tax or the water charges that are levied? That is one aspect of controversy. So the CBIC flyer states that where it is collected from individual tax owners, then the GST is not leviable. Majority of the times it is seen that property tax in many cases is the bill is issued in the name of individual flat owners. So in such cases where the society is merely collecting from individual flat owner and paying it to the government, in that case the society need not charge any GST on this particular amount. These can be collected as pure agent. Next issue comes up with electricity or water charges for common areas. Now, with regard to these common areas, the bill is always in the name of the society. Thereafter, depending on the area, or in certain cases directly divided by the number of units, the society recovers the charges from each individual flat owner. Now, what does the CBIC flyer state? The CBIC flyer with regard to electricity charges states that GST is not leviable on electricity charges which are collected under other statutes from individual flat owners. The argument that is made in favor of the taxpayers or against levying GST on electricity charges is one argument that is made is that these charges are collected by the residential society as pure agent. However, in many cases, it is seen that such society is not satisfying all the conditions of Rule 33 of the CGST rules that are given to be able to claim the exemption of pure agency. Therefore, then thereafter they are falling into the trap of receiving a notice, and in case of cooperative societies especially, they are cooperative societies generally do not take an aggressive stand because the members are contributing. Tomorrow they are to litigate, all the members are going to have to contribute to the litigation cost as well. Therefore, in many cases they are choosing to not take an aggressive stand and just pay off. However, paying off GST on that also is causing a problem because all the residents are either not registered under GST or not eligible to claim the input tax credit. As such, 18% cost is being added and being borne by the flat owners ultimately. Next contention in favor of not charging GST is that entry number 77, clause B that we have seen. Now, I would like to go back. So what does this say? Service by an unincorporated body or a non-profit entity to its own members by way of reimbursement of charges or share of contribution for provision of carrying out any activity which is exempt from levy of GST. Keeping this entry in mind, I am putting a proposition forward that this argument can very well be made that electricity charges or water charges collected by the society from the members, even if for common areas, are exempt from GST under 77B, even if the conditions of pure agency are not being satisfied. One will say that what is being provided is electricity, they are not services that are being provided, or water is being supplied. So therefore, to that, my contention is that electricity is not being supplied by the cooperative society to its members. Electricity is being supplied by the electricity distribution company to the society. What charges are being collected is for the service of making this electricity available to all the members. And therefore, this is an activity. This is not supply of goods by the society to the members. For that matter, the society is not even allowed to supply electricity because it's not authorized to do so. Therefore, the charges that are being collected are only for the activity of arranging the supply of services of electricity and not supply of goods. And therefore, it can very well be argued that this particular aspect is covered by entry number 77B. The last part of controversy is with regard to sinking fund. Now the CBIC flyer again says that sinking fund, repair maintenance fund, car parking charges, non-occupancy charges, simple interest for late payment all attract GST, as these are charges which are collected by the cooperative society for supply of services meant for its members. Now, I have no argument with regard to car parking charges or non-occupancy charges or simple interest that is collected. They are all very much liable to GST. What we are talking about is the sinking fund. Yes, sinking fund, you will have to admit that yes, it is liable. There is an argument stating that it's a statutory levy and therefore it should not be liable to GST at all. However, in my opinion, that argument is a little difficult to substantiate, as just because something is prescribed by the bylaws, you cannot state that it is outside the ambit of GST. There are many things which are prescribed by the bylaws and they are required to be collected. So this, yes, one argument is there that these statutory charges required to be collected as per the bylaws is not a voluntary service that is being provided by the society. These are mandatory charges and therefore it is not supply. So that is one argument. If it is considered that yes, sinking fund is liable to GST, then there are again two contentions that are taking place. One is that sinking fund is an advance because there is no service that is being supplied. Sinking fund is collected for a future contingency of a service, or for that matter, repair and maintenance fund, that tomorrow repairs will have to be done, and for that a fund is being created today, so that one single amount need not have to be coughed up by the members in one go. So it's a precautionary measure. The services are not supplied right now. The services by the society of procuring services from third parties and for the benefit of the members will be supplied at a future point. However, since this is a supply of service, advance is also liable to GST, and therefore the revenue will always contend that sinking fund, the amount that is received is an advance, which is received for provision of services in the future, and it is liable to GST on the date of collection because advance is liable to GST for the supply of services on the date of receipt of advance. The taxpayer, on the other hand, will always contend and should contend that sinking fund is not an advance. Even if it is considered that it is liable to GST, it is a deposit that is received for a future contingent supply, and it shall be liable to GST only when it is adjusted against the consideration for a service in the future. So we have already seen the definition of consideration. We have also seen that consideration does not include a deposit till the time it is applied towards the consideration. So the argument in this case should always be that sinking fund is taken as a deposit from members because the supplies are not fixed. In case of advances, there can be many arguments made further to distinguish an advance from a deposit, to state that an advance is received against a certain supply, whereas a deposit is taken in case of a future contingency. In this case, the supply is very much contingent upon whether it is required to be made or not in the future, and therefore the GST shall be payable on this amount only when such amount is as and when and to the extent that it is applied to a service for which this fund is created. With this, I have finished my presentation. I thank you all. I hope that in this virtual scenario, where it is not very comfortable to have a, it's always better if an interaction is had in case of lectures. But here I still hope that all of you have been able to understand and appreciate the points that I have to put across. Thank you very much once again, WIRC. I thank you. Any questions we can take up now?
Thank you so much, sir. We have a question that please confirm that while computing the amount of 7,500, the amounts collected by CHS towards exempt service such as property tax, electricity charges can be excluded, and 7,500 limit will apply only to the other charges, that is the maintenance towards the maintenance.
Yeah, I think that last slide that I have covered, valuation
Yeah.
issues, is covering all these questions already.
Okay. And I have one query.
Yes, sir.
That basically, supposingly there is a Section 8 company which is having a 12-year registration
Yes.
and collecting a CSR donation with a specific intent to train people and having a MOU with them for training vocational courses, whether that will be liable to GST or not.
Supply of service of training for vocational courses, as per my understanding, is not covered by charitable activities.
Okay. But in the education
Correct.
part,
So in entry number 1, it is not going to be covered.
yeah.
Entry number 66, as I said, it has to fall under the definition of an educational institution. So the third part of the definition of educational institution, if it is a recognized vocational course, only in that case, this entity will be, Section 8 company will be considered as an educational institution. If it is not a recognized course, then it will not be considered. So exemption of educational institution will also not be available.
So it should be recognized with the government of India or some Skill India movement or sort of, or how can we?
If I may refer to that particular entry again.
Yeah.
Yeah. Education as part of an approved vocational education course. Yeah. As per my understanding, sir, it is approved by the central government.
Okay. Okay.
So it's a government approved vocational education course. Only when that is being covered, then it will be considered as an education.
Charitable organization conducting an activity of education, that won't be covered if it is, and that also will be covered if it is an approved vocational course.
Correct. As an educational institution in entry number 66, not in
a charitable institution conducting an education activity.
Correct.
So it will be termed as education institute.
Only. Educational institution for the purposes of this particular entry.
Okay. Okay. Fine. Thank you so much. We have one more query. If the society characterizes the sinking fund collection as a deposit in its maintenance bill, will the issue relating to advance for service will be eliminated?
Yes, as I said. Now, there are certain societies which have other apprehensions of writing it, mentioning deposit, stating that if we start writing it as a deposit, then the people will start demanding refunds of it, and you cannot refund a sinking fund.
Okay.
But however, whether you write as a deposit or not, the stand that is taken in many cases is that yes, it's a deposit. If you write it, if the members are okay with it, so it will be an added evidence to place that this we are always considering this as a deposit.
Okay. And there is one question from Anshuman. Could you throw light on online education? I don't know how is it is specified, but a simple question on education, online education with respect to. Okay. So can you elaborate on the question, Anshuman, please?
Yes, yes, that would be better. Now, till the time it is being clarified, I will tell you what I am understanding from the question.
Okay.
We are dealing with the exemption notification with regard to educational institution. Otherwise, it's a service. Okay, we all agree. It's not a charitable activity. That also we all agree. We are only concerned with entry number 66. So, if the online education that is being provided is with respect to preschool education or education up to higher secondary or equivalent, okay, again, we are talking about any institution which is providing services by way of preschool education. We are not discussing. So if the question is with regard to a Byju's or any other such classes which are being conducted, which is in addition or in supplementary to your actual education, the school education. In my opinion, these do not fall under educational institutions. These are coaching classes, which are always liable to GST. Even under GST, there is a circular that these are considered to be coaching classes, which will be liable to GST. However, if a school is providing, because of the COVID scenario and everything, is school or college is providing online classes, in that case, there is no restriction. Where it's an educational institution, it is providing its services to its students or faculty or staff. It can be offline, it can be online, it will still get covered by the exemption entry.
Okay, okay. Okay, thank you so much. So I hope
Any more questions?
I don't think so. There are much questions.
Yeah, 3 questions I am seeing. I
Yeah,
think you have covered all 3.
yeah. So my question which related previously, so there is another point to it that we are getting a CSR donation in exchange of something which we have to provide as per the MOU of the terms. So whether it can be liable to GST in that aspect, where in the previous slide we discussed that if we are taking a donation for a specific purpose to conduct a specific training, then it shall be liable to GST, whether it is an approved vocational course or not.
Okay, you want to this? We are talking about the educational institution part. You are receiving CSR donation against which you are supplying services of approved vocational education
With the MOU with the corporate entity.
Okay, there is an MOU with the corporate now. Irrespective of where the consideration is flowing from, first and foremost, you need to see whether the nature of supply that you are providing is covered by any exemption entry. Now, the supply that you are making, I do not know in what circumstances will this be possible, where a corporate is giving you a CSR donation and you are conducting education as part of an approved vocational education course. Okay, let's take an example where this CSR donation is made to an entity or an institution which itself is providing approved vocational courses.
Okay.
Correct. So so they are eligible for this exemption as educational institution.
Yeah.
Correct. Now these services are provided by them to somebody.
Yeah.
Now they are receiving a donation. Now, whether this donation is in specifically towards providing services to a specific section of people that they are providing this education to?
Unskilled labor sort of AFTs, air conditioner technician sort of services.
Okay. So in this case, the services are being supplied to somebody. The consideration is flowing from somebody else.
Yeah.
Is that correct? In my opinion, this will also qualify for exemption.
Okay.
Okay,
but with a specific direction. But with a specific direction of MOU or agreement that if you conduct a training for this much candidate, you will provide this much CSR donation. Then
correct. Now it's a donation. When we are coming to the aspect of donations, it is very clear. This is not a charitable organization, right?
This is a charitable organization registered at Valley.
Okay, it's a charitable organization. Yeah. Now the circular of CBIC is very clear on this point also. That donations, and I have also stated that the nature of donations, where there is no element of advertisement, it's not a consideration at all. So the argument which can be made alternatively that there are 2 supplies being made. One to the people to whom the training is being given. Second to the entity to whom which has paid you the money, and what services are you providing to them. Now where there is absence of consideration because the donation is not with any specific criteria of advertising, that there is no restriction. You can place that we will give you this donation, you will do this particular activity. So long as that activity is not giving you any particular benefit. Now, if you are putting up hoardings of that company, that this is a CSR initiative of this particular entity, that's an advertisement, and that is liable to GST.
Yeah. Okay. Yeah. So we are done with the session. There is one more question. In case of a charitable institution, can an agreement be taken that supplies not for furtherance of any business or trade? For example, goods supplied to needy students at a concessional rate. Please share your views.
Yes, I will share this. Now, I will refer back again. I will go back and refer to these cases that I have dealt with. One is of Sai Publication Fund. Second was of this Srimad Rajchandra Adhyatmik Trust, which was a GST AR and AAAR. Now, in both these cases, the argument that is being made, sir, is that our primary objective is that of philanthropy, of spreading somebody's message. And in the course of doing that, we are providing certain goods or selling certain goods at cost, and that is not our primary intention. If I may refer to the Sai Publication Fund argument, the Supreme Court in that case had stated that the question of profit motive or no profit motive was relevant only where the person carried on a trade, commerce, or manufacture. They further stated that where the main activity does not amount to business, the intention to carry on. So the whole point in Sai Publication Fund was that where the main activity is clearly out of the purview of business, there is no trade. There is no, so when you're spreading the message of one particular sect or one particular guru, there is no trade, commerce, manufacture, wager, so or any similar activity they are talking about. So there is nothing that is covering in the main clause of business. Therefore, that is not business. And where your main intention is not of business, any ancillary activity, in such case, in order to prove that it is business, one must prove that it is independently can be considered as a business. So by way of each individual case, by way of volume, now in this advance ruling in GST, the advance ruling authority has also made an observation that we are also looking at the turnover of your sale of spiritual products, which is quite high, and the proportion of turnover is high, and therefore we are treating that this is an independent activity because they have referred to this Sai Publication Fund, where it states. So now, to answer this particular question, where if in case you are saying that you are supplying goods to needy students at a concessional rate, you cannot deny that this is sale of goods. Okay, however, in order for you to come out of the purview of business, you must prove that my primary activity for which my trust has been set up is not business. Therefore, you must prove, so the person who is wanting to charge this activity to GST by way of including it as business must prove that this particular activity of supply of books to needy students is independently an activity of business and not merely incidental to the primary activity. Primary objective. So only when this thing is proved can it be said to be business. If not, no. And to give you a practical answer to what the department is treating as, or even for that matter, I gave you the example of Nagri Eye Research Foundation, Gujarat High Court. They clearly stated that yes, you are supplying medicines at cost or at a very low price to needy and poor people. You are formed as a charitable trust with primary intention, but the trading activity in itself is business, irrespective of whether it's for pecuniary benefit or not. So by that logic, the answer to your question is, when you're supplying goods to needy students at concessional rate, you are still charging for it. You will be required to pay GST on the concessional amount. If you want to come out of it completely, like I said, as per the Supreme Court judgment, you have to prove that the primary activity and then the ancillary activity independently.
Okay. Thank you so much. Thank you so much. I hope everyone is clear. There is one more. Do we have time to discuss more? Or
It's
we shall
7:05. I think we can take up one last question and close.
Yeah. Okay, fine. This is the last question. Can you share your views regarding sale of prasad or for darshan at the temples?
Prasad, I think if I have not referred to exemption with respect to goods, if you refer to the exemption notification with respect to goods, prasadam is categorically exempt from GST. So sale of prasad not liable to GST at all. For darshan, when you are saying for darshan, you are charging certain amount as a priority. For person pays 50 rupees or 100 rupees and gets priority in for darshan purpose, there is no in the queue. There is no exemption.
Okay. So hope everyone is clear. Thank you so much.
I will clarify this one step further because temples have been discussed. So because there are certain temples in Mumbai which I have been advising your sir, when you first and foremost have to take a stand as to whether you are saying that I am not liable to GST at all, I'm a charitable organization and all those things. We all know in case of temples, it is very hard to state that they are not in business anymore. Okay, I will be very candid with you. So once you conclude that and you say that we are in business, then all of these activities, now there is a under the VAT Act, there was a DDQ, like we have advanced means here. Under the VAT Act, there were disputed questions determination. In that, Lal Bagh Raja
case was discussed.
DDQ had happened.
DDQ was already.
They're saying that they are dealers. All this gold that they are receiving, which they are auctioning, because they cannot keep all of it, and they are receiving money, sale of goods, and it is liable to GST. Similarly, unless there is a specific exemption for goods, for example, you have received a lots of coconuts and you are selling those coconuts and receiving money. Now, coconuts specifically are exempt from GST, therefore you are not charging GST.
Okay.
Otherwise, other things that you are receiving gold, you are receiving chains, you are selling those, auctioning those, you will be required to collect tax on this.
Okay. So thank you so much for your insight, knowledge, and sharing your research and everything. I hope this session was fruitful for everyone and a candid discussion with sir. So I, on behalf of WRC, present a hearty vote of thanks for answering all the questions and explaining each and everything and bringing all the AARs from all the states and discussing the transaction wise each and every. I hope it was useful for the participants as well as for me. So I present a hearty vote of thanks to you on behalf of WRC. Thank you so much.
Thank you so much. It was a pleasure.
Yeah. So we shall wind up.
Yes.
Okay.
Thank you.
Yeah. Thank you so much, sir.